Right. Good morning. Coming to you live, Cape Town, South Africa, offices of AG Capital. All right, let's get rolling. All right, last night we saw a pushback to the upside in the S&P. Finally, we saw 3 weeks of correction going through last week. Finally, I think the markets just kind of had enough of it. We did start to see a slight weakening of the dollar. Obviously, that was helped or maybe led by the yields on the 10-year coming down a bit. And so we're able to start to see maybe a little bit of dollar weakness as a welcome relief to the market. A lot of oil weakness as well yesterday. We had light sweet crude that came down and hit 6-year lows, and it was new recent lows. We'll show you that chart in just a little bit. Yeah, bottom line, we keep seeing data points that coming in marginally softer than some of the prior numbers that we've seen. Industrial production, Empire State numbers. We saw PPIs on Friday. We continue to see that same sort of thing happening right now in the market, and that's why the Treasury yields are obviously coming in, and which is obviously not a positive for the U.S. economy, but the markets take it as a positive simply because they think that the Fed's not going to raise rates as soon. So market runs back to the upside. All right, moving into Asia. Every market in Asia was up on the session. Once again, see the Nikkei making a new 15-year high. We did see that the yen kind of just hang in around the same sort of range, but that's probably more due to dollar strength than anything. But the fact that it hung there, we managed to take out the highs. I mean, yesterday we saw the DAX. I mean, the DAX is just going parabolic right now. We saw the DAX up, was it 2.24% yesterday? Absolute insanity. Up about 35% off of the lows from only about 6 months ago. Yeah, I mean, so every market really managed to catch a nice bounce here. Shanghai as well, 5-year highs. This is a low, I thought it was a high going all the way back to 2008. Maybe it's an intraday high going all the way back to 2008. But anyway, and then we saw Billiton climb a little bit in Australia. We obviously traded up here as well, but they had 1.5% in Australia on the back of announcing some of the details about the spin-off they're going to do, and that the new listing with some of the local assets here. All right, looking at our chart of interest of the day is showing crude oil here, absolutely bombing out. I mean, we're going to show that again in a little bit, but I think it's important to realize how important this chart is because there's so much. I mean, the biggest sector in the S&P 500 is the energy sector. The highest beta sector at the moment in the S&P 500 is the energy sector, and that's going to open up a lot of, the biggest percentage of high yield debt is in the oil sector. So, I think that this is a very, very important chart, and we mustn't take it for granted. All right, in terms of corporate action yesterday, we saw Remgro out with half-year numbers, came out after the bell. We came in at 711. We're looking for a full-year number around 1502, so I'm not 100% sure how that's going to compare. In terms of revenue, 13.11 billion, also full-year numbers expected at 26.12. Divvy per share coming out 4.68. I think that the NAV per share actually looks relatively solid, coming in at 284. Previous number was at 245, so the market might like that, the NAV. But I think all in all, in terms of the numbers, I'm not 100% confident that they were spectacular. All right, looking at the market data today, locally we've got current account numbers as a percentage of GDP and overall balance. We've also got ZEW survey in Germany. Those have been great numbers to follow, for quite a while now. We've got CPI numbers month-on-month and year-on-year for the Eurozone, also at 12. And then we've got housing starts numbers at 230 out of the States. All right, let's get into some maps. All right, first thing we're going to have a look at here is the German DAX. And this is what I was telling you about. If we go back here and we look at a 2-year chart, so I remember showing this inverse head and shoulder breakout here when we took out this level here in the DAX. And you can see a beautiful inverse head and shoulder setup, and the target was to about somewhere right up here. I think about 1116, 1116.50, something like that. Well, we've just exploded on through that. I mean, look at it. Look at how many down days we've had in the last. Just zoom this way forward. I mean, the last 20 days we've had like 2 down days in the German DAX. I mean, it just goes up every single day, and in spectacular fashion. I mean, we've had a couple of days where we've been up 2.5%, 3%. We just continue to move to the upside. That's obviously be driven by the weaker euro, Germany being a big export-based economy. And I think some of the guys were probably caught on the wrong side of this. Now some guys probably caught short. So I don't know if we want to be a train stopper there, but at some point when we start to see some reversals coming in there, it might be a decent one to have a look at a short. Okay, here's that same chart we looked at in the chart of the day a second ago. This is light sweet, not Brent crude, but light sweet crude. We took out the closing lows as of yesterday for 5 or 6 years in light sweet. For me, this chart is relatively well defined in terms of, we tested for quite a while up here around the same sort of level. And I think we're going to need to move the height of this channel to the downside. That's about $10. That's putting us into the low $30 range. And under that scenario, I think you're going to see a proper bleed out. And some of these oil stocks, I think it gets worse before it gets better for a lot of these guys. I don't think that they have a quick recovery coming on the horizon. You've got a potential nuclear deal with Iran. That happens. You get all the Iranian oil supply that's not been able to go to anywhere but the black market. It's been really hard for them to move their oil supplies. All of a sudden that comes flooding back onto the market. You already have a huge oversupply in the States where they can't export. So this Iranian oil starts to supply everywhere else. Could probably put a lot more pressure on Brent. I just think the outlook for oil, there's no real upside here in the near term unless OPEC comes out and does something spectacular. So bottom line is, things could get uglier before they get better in oil. On the back of that, we'll look at Sasol, obviously taking out that low that we made around 390 before we came out and made further lows. I think that's important, because this could be looking a little bit head and shoulder-ish, but bottom line is down here around 360. Unless we get a big bounce up in the oil price pretty soon, I think we're probably going to come out and down and at least test these lows at 360 in Sasol. All right. CFR here, you can see how many days is this? 1, 2, 3, 4, 5, 6 days. Yesterday was the 6th day we've tested this 105 level. Every other time it's failed. We did close pretty much right at it yesterday. If we get above 105 and can kind of hang there for a while, then I think we could actually get a breakout on this move. We've got some consolidation between 102 and 105. Keep a close eye on this one. There could be some upside there if we get a breakout. All right, we're going to look at SA Breweries here. SA Breweries, that was a year chart we were just on. Now this is the 30-minute. You can see here we made a new all-time closing high in SA Breweries last night, kind of just breaking out of this continuation, but only just. I don't think it's enough to really call it a breakout. I think we see a push north of 680. Then I think we've got a quick move to 700 in SA Breweries. So like I said this morning, you could very easily see a little punch up, around 682, 683 or whatever. I think you got to just not be afraid to get on the bus there. I think we can move to 700. I wouldn't be surprised if we get there today or tomorrow. All right, let's look at Tiger Brands. And you can see here, actually, you can see it very clearly here. So we've been flirting here quite badly with major support anyway, really dropping off there. We're going to move into the year chart here, and you can see it even more clearly. Obviously, the level right there, bombing out. Those were any of the closing lows and a lot of touches along that line. Dropping out below that, we've already moved past the point of that little gap fill. I think we're going to come down here to around 319. We're right at the 200-day at the moment. As long as we get below that, I think 319 is on the cards in Tiger Brands for the test of support. And the last one for the day, we're going to look at Truworths, kind of breaking out of a bull flag here. And even with this weak rand, you just can't hold these freaking retailers down. It seems like everybody gets caught trying to make the same play. Breaking out to the upside here, for me, this chart's taking us to new highs, maybe all the way to $100 in the way this one's shaped out. And that's it for today, guys. Good luck out there.